Hello, everyone. Thank you for joining today's session. The topic of today's session is the digital assets 2.0 in tech in the finance world. And I am Sai Prasad Raut. I will be uh, moderating this panel discussions along with the wonderful panels that we have with us today. Uh, to introduce my panel here, let me start with Parth. Parth Chaturvedi, he is investments lead at CoinSwitch Ventures. Parth started as an investment banking analyst, moved into blockchain research as an associate, managed crypto markets for an institutional trading platform. Currently, he is investments lead at CoinSwitch Ventures, an Indian crypto investment platform. At CoinSwitch, his role entails leading Web3 and crypto investments for CoinSwitch venture. Welcome, Parth. Followed by we have Ravikant Agarwal. Ravikant is Director of Growth at Polygon Labs. Uh, Ravikant is seasoned business and strategy consultant and demonstrated history of working in management consulting industry. He also worked in areas of blockchain and digital assets, digital identity, open finance, and data protection. He is also an entrepreneur, mentor, and speaker. He has extensively worked in banking, consumer lending domain across several geographies for large BFS clients. He provided business consulting and technology solutions across transformations themes that resulted in direct revenue generation and efficiency gain. Then we have Aid Marquez, who has joined us from Hedera. He is leading developer. He's the developer relations lead at Hedera. Ed is, as I said, developer relations engineer for Hedera at Swirls Lab. He is passionate about helping developers get on board with Web3 and the Hedera network. In addition to distributed ledger technology, it has worked on model-based design and development of control algorithms for embedded systems. Ed holds MS and BS in mechanical engineering from Virginia Tech and is currently pursuing MS in business management at Harvard. Then we have Talha Khan. Talha is product manager at IBM. He has worked on the quantum team, creating the very first presence of the IBM Quantum on the IBM Cloud. He's also lead for the cloud marketplace partner GTM, creating net new marketplace seller GTM program and crystallizing how we do joint GTM with partners selling their softwares and services on the IBM. So those are all panels that we have with us today. I welcome all of them for the panel discussion today. Let me introduce myself. I'm Sai. I am with FIS from last 3 years and into the crypto space from last 7 years. I am the strategic advisor for the crypto and the Web3 team with FIS, and also the co-chair for technology and the product committee with Hedera. To start with, when we are talking about the digital assets, those who have seen the digital assets, we have seen the different cryptocurrencies. We have like 24,000 plus cryptocurrencies are in the market, and then we looked at the NFT boom in 2021, how the NFTs are kind of disrupting the way digital assets can be used in the e-commerce space. So imagine that an NFT will have underlying physical assets that tied with that. And the third segment that we have also seen the security tokens, wherein the tokens can be mapped with the financial assets, be it the equity and the bonds, so on and so forth. And recently, the FIS has launched the financial report on the technology side, wherein we looked at various different aspects, including generative AI, cloud computing, embedded finance, And there is also one specific part which is very important about the digital assets, that how we can leverage these technologies across the different organizations. And that's why we are now discussing today about how this will impact on the financial services market. So with this one, I will so Parth, at CoinSwitch Venture, what is your focus on tokenization of assets? Like, what are the key trends that are driving your strategy at CoinSwitch Ventures?
Thank you, Sai, for the question. And I will just like set some context on what CoinSwitch Ventures is. CoinSwitch is one of the leading exchanges here in India. And last year, in the peak of the bear market, is when we launched our corporate venture arm. So it's our own balance sheet money that we are deploying into these early stage Web3 companies, primarily focusing on pre-seed seed rounds. So like very the product market fit is still something that is being discovered, and that's why we get to see very trends before they become like more mainstream. So one of the trends which is now like sort of like we are seeing emerge in this cycle is the tokenization of real world assets, or RWAs as they're called. So this in the previous cycle was concentrated on, like, let's say, real estate tokenization or art tokenization, but in this cycle we are seeing more financial assets being tokenized. So the good examples that you mentioned, bonds, there are already some funds that have been tokenized, and by big players like KKR. So we are seeing sort of the mainstreaming of institutions looking at this technology. And some more background here, like my original stint in blockchain was with JP Morgan, where they started the Onyx team internally, focusing on enterprise blockchains and digital assets. So there as well, the focus has been on repo markets. So the first product that they launched was actually the tokenized form of repo purchases, and basically that market used to be an inter-day market. And the settlement times were so longer, but because of the benefits that blockchain brings and the benefits that tokenization brings, that could be done in like minutes instead of those days. So that has created new liquidity for these repo markets. And I think recently they came out with like a news article as well that they're doing over $1 billion a day in these tokenized assets. So that's a real world use case that has taken off and is being adopted by institutions. Other trends, we have also made like a couple of investments in this space. Polytrade is one, where they're trying to tokenize trade financing invoices. So generally what happens is, in emerging markets, suppliers take some kind of invoice and they get paid after 30 days or 60 days. So what tokenization can do is, you can use the same receipt, tokenize it, put it in DeFi pools, get like a good return on it, and basically shorten your working capital cycles, and better manage your cash liquidity. So again, like real world use case, already seeing like good uptake. We will continue seeing such innovations, I think, in this cycle, because it's much more institutionalized. We are seeing interest from big asset managers like BlackRock. So I think this cycle in that sense will be very different, and we'll see more institutional trends go mainstream.
Perfect, perfect. Thanks for that, Parth. My next question is to Ravi. Ravi, you are with Polygon, which is one of the underlying technology for enabling the DLT and the blockchain in the space. What are the latest trends that you see in the digital asset space for that are focused especially on the financial markets there? You're on mute, Ravi.
Yeah, I think as Parth was mentioning, there have been an uptick in terms of number of activities, that kind of use cases that we are seeing in the using the digital assets in the financial services. I think real world asset tokenization has been a great example, which has touched not only the bond, stock, commodities, but now making inways in terms of some other real world assets as well. And I think larger institutions have seen a potential of what can be done with this technology, and that's where there is a growth in the adoption side as well. And much bigger partners, institutions across the globes have been looking in terms of tokenization of different types of assets. But apart from that, I think there are a few more trends that we are witnessing. The first one, which cannot be avoided, and everybody of us are well aware, which is in the decentralized finance. And though it's a broader term that encompasses many things, but I feel that lending, borrowing, and trading of the assets has been enabled into different scale. And that is again totally permissionless, making it in ways where financial institutions can also create up their own variant of it, which is something, let's say, Aave Pro, right? Where they can implement a layer of KYC, and those are the kind of trends that we have seen in the general lending, borrowing, and trading kind of an aspect. Decentralization of the exchange, I think, is another very very interesting stream. I also wanted to touch on the NFT segment, the non-fungible tokens. How are they impacting markets are working? And I've written recently into a paper that has been published by Barclays Rise, where I've given certain ideas in terms of how financial industry is getting impacted with the help of Web3. So with the help of NFTs, again, whether it is ownership of a particular asset or ownership of a document which is representing a financial assets, I think those are the kind of use cases which are getting very encouraging. For example, bill of lading, NFT representing bill of lading, and then how it changes hands in the entire process and make the process much more optimized. I think moving into the payment segment, which is where, let's say, the central bank digital currency is making great inroads, and there are more than 160 countries who are at different stages in terms of exploring what can be done with the help of CBDCs. Especially, there are certain countries which are much more ahead in terms of its adoption. Though I feel that the real adoption is yet to come. We are still in the early stages of experimentations and some early signs of adoptions. But CBDC is a great way where central banks are now trying to see how can they leverage this technology and bring in more transparency, bring in more interoperability and programmable assets to the citizen, to the residents. I think that's a very interesting scenario that we have seen, especially even in India. E-rupees is an implementation on a similar line. Moving on, keeping and drive onto the payment side is a stable coin.
Yeah.
This is certainly a very, very interesting area, which has shown a great amount of liquidity into different aspects. And I think USDC, USDT, which are the two leading stable coins, I think they have been showcasing in terms of the adoption and the liquidity that has grown over a period of time. And now we are seeing how CBDCs and stable coins are coming with an approach which is hybrid stablecoin, where a bank is now issuing a stable coin. So I think that's another very, very interesting hybrid stable kind of a model that we are seeing. And there are smaller economies who have tried that, and their regulated banks are bringing in more regulated stable coins, which is an interesting one. I think apart from that, reputation using digital identity is another area which is going to be becoming like a layer for many, many financial activities that are done in the financial market, providing that kind of a self-sovereign identity to the user that are again reusable and interoperable.
That sounds good. And you rightly said the stable coin is having a major contribution for that adoption. We have also in FIS, we have launched one offering which is the USDC settlement for our merchants recently. So those merchants who wants to dip their toes for the crypto world, that's the very easy integration for them to kind of have this offering in the crypto space. So with
Amazing.
that one, I will now move on to Talha. Talha, you comes with the great background of the consulting and various different GTM strategies. What are the learnings that you had over this time to move into this digital assets 2.0?
Yeah, thank you, Sai. So, IBM has had an history in this space since 2015, right? From Hyperledger to enterprise blockchain consortiums, to some of the more recent affairs, right? In custody with our partners, Metaco. In order to set the stage for the question, you have to really define what the pain points of digital assets 1.0 were, which was getting the buy-in of a consortium of institutions, whether it's Maersk and supply chain finance, compared to banks, right? It's very difficult to incentivize 15 banks to get on one ledger and merge all their activities together. So, some of the learnings that have come from that, and especially moving into the market today, have been really centered around sort of moving away from the space of POCs, right? I think my panelists over here have sort of hit a lot of the points that are sort of being explored. But I think the biggest difference is moving away from POCs and really breaking into budgetary dollars, right? In the past, getting into a POC with financial institutions for blockchain was its own separate unit, and separate money set aside for research and activities. Nowadays, with digital assets and traditional finance sort of merging together in terms of budgetary dollars, you have to break into those budgetary aspects, right? So with that in mind, really driving revenue and particularly honing in on the reasons why you should adopt a blockchain for whatever reason.
Exactly.
It has been the biggest difference, and areas that are driving a lot of that focus, like my panelists mentioned, were things like intraday repo, where you can open up liquidity, and that has all sorts of value props to go and present to your board, right? Whether it's I don't know, I can get yield for a couple of days throughout the year on X asset for X longer time, or I can custody assets significantly more securely than before with significantly less operational cost, right? So really presenting those things, I think, are part of the story of moving into digital assets 2.0, where the era of POCs is coming to an end, and we need to drive some adoption into this space. So that's the take that we've got over the years.
Perfect. Yeah, I think I can resonate those thoughts, that most of the organization, they go for the POCs, get those POCs built, and they are sitting on the shelf for a longer period of time and trying to see the light of the day in the long run. So yeah, I think that's a great point that you have. Parth, you want to say something?
But I think that has also changed now. Like, again, I'm telling this out of personal experience. Like, I've seen that team grow Onyx, like within JPM, like from 8 people to like over 150 folks on different working on different projects, different sub teams. Like, there is a separate team looking at coin, separate team looking at digital identity. So I think we have moved beyond that stage, at least like in some of the banks. And again, Citi is also doing a lot of work, HSBC. So I think this cycle in that sense is very different.
Perfect. Great. My next question is to Ed. So Ed, what are the barriers to adoption at the global scale for digital assets in a whole?
If we look at the global scale, right, usually enterprises and your medium to large size businesses are often the ones kind of creating value and delivering that value at the global scale. So starting with those players, I would say there are some behavioral challenges for organizations, right? You're always going to have some internal resistance to change and some risk-averse cultures in companies. And so, that can be true for small process changes, but also for big technological shifts, like embracing a new technology, like digital assets, like distributed ledgers, and incorporating that into the operations and the offerings of the company, right? There's always a learning curve that needs to happen, an educational component that also takes time. And it takes time because everybody has to be on board and aligned, right? From the C-suite to the decision makers, the managers, and the individual contributors. And what we have seen at Hedera as well, is that everybody's very curious, right? They're very interested in how distributed ledgers will give them a strategic position, how it will give them operational efficiencies, but they also want to be sure that they understand the risks of adopting and building on a somewhat emerging technology, right? So they're being somewhat cautious. Thus, all these POCs that have been happening and that hopefully will be moving away from. And it makes sense, right? They care about their brands in the market, their positioning in the market, and also their longevity in the market. So that caution makes sense, but I think it's an obstacle that we have seen. The other challenge or barrier for adoption, I believe, relates to regulation, right? Depending on the jurisdiction, depending on the industry, because the demand is there. There's interest and demand from retail users, from investors, from institutions, and businesses want to serve and capitalize on that demand. And the forward-thinking jurisdictions are enabling that. You have places like the UAE, Singapore, Europe with MiCA that are enabling that. But you also have, somewhat laggard jurisdictions where things are progressing a lot more slowly just because of the unclear regulation. And so I think my key point there is that not all industries can move at the speed of innovation and blockchain. And then the third series of challenges that I see are also in the technological realm, right? You have these things like user experience, that there's big improvements that we need to make in that area so that it feels like a more native experience, like a Web2 experience that we're used to. You have the ease of integrations with existing technologies. You also have the interoperability between all these different blockchains and networks that are playing in the market. And you also have scalability challenges from the technological standpoint. So that's how I would summarize it, right? You have the organizational behavior challenges, you have your regulatory environment challenges, and of course the technical challenges, but those usually can be addressed in a much more agile manner.
Absolutely. Makes sense. I think looking at these challenges, obviously it comes with some of those limitations for going ahead with that digital asset journey. So Parth, what do you think, that looking at these challenges, do you see any limitations for that journey from the coin switch, maybe from the coin switch perspective and the global adoption perspective? Where do you kind of fit this in there?
So I think one point that was touched upon by the panelist is around regulation, and like again, we know that it's a very sensitive topic. Like a lot of things are moving. There are a lot of moving parts involved. But I think India is taking a very slow and steady, matured approach in terms of
Exactly.
building its position. They use the G20 presidency to come out with a framework of sorts for standards across different jurisdictions, because they believe that only one country can't regulate a global digital asset. So I think we will see more development from other jurisdictions come in the next 1 or 2 years. As MiCA goes live next year, with proper implementation, I think a lot of bigger jurisdictions will also try to move quicker. Regional players Dubai and Singapore, they have really embraced crypto with very friendly regulations. And from a CoinSwitch Ventures perspective, we do see a lot of Indian founders trying to set up their offices there and hire the developers in Bangalore. So that is something that is already happening in the region specifically. UAE, for that matter, is I would say Dubai is setting up VARA, the separate regulator for virtual assets. I think that is a very strong proposition for anybody to consider, setting up a business there. So I think this challenge remains one of the key. The other one that was mentioned was around UI UX. I think that is also coming along fairly quickly in this cycle. The big problem previously used to be onboarding. Like users couldn't really onboard into Web3 without managing their private keys or issues of maintaining a crypto wallet. But now they have account abstraction as one of the technological innovations.
Exactly. Yeah.
Where you can use social logins. It's a very Web2 experience that you can just put in your Gmail and check. And similarly, there are MPC technology. There are a lot of innovations happening on the onboarding side of things. So I think if we have good decentralized apps come up, we will get a lot of users interested in this space, and probably that challenge will also be solved for. The last one is, I think, interoperability, which again is a major theme for people to solve right now. So what we are seeing is there are going to be app specific chains. Like each app would probably want to run on its own chain to achieve the fastest throughput, minimum fees, and all of these will be developed as modular blockchain. So there will be a layer 2 solution for execution, a different layer for settlement. So again, all these things are happening as we talk. It's just a matter of time, when they become more mainstream and they are more battle tested, stress tested to survive, actual users coming on board. But I remain hopeful, and hopefully in the next 2 years we'll have a lot of these problems in hindsight.
Yeah, exactly. I was talking to someone who is like an end user, and few feedback that I received is, why should I use one of the plugin on my browser and then use MetaMask and those, wallet plugins to sign my transaction? It should be seamless when I'm performing a transaction. On the other hand, I've seen some feedbacks like, why should I pay that much of gas fees for every transaction? It should be like free for. And obviously, these are like common questions are, the end user from the usability perspective, they want to have that seamless experience like how the web 2 they have been always used to. So I think that also is going to impact a lot from the user experience perspective.
These are problem statements that startups are solving for, and I think again with time they will be solved for as well.
Absolutely, absolutely. The next one I have for Tala, what is the success mantra you think for the digital asset penetration in the future economic growth?
Yeah, so I really break this into two time frames, short term and long term. So short term, I really do believe the success mantra is drive real value for financial institutions, plain and simple. Very, very clear value props for various parts of the stack on your piece of paper to get into the bank's budget, right? Things you can clearly say to a CISO or a CIO, you can use this for this use case. It'll save this much money compared to traditional finance, right? Or save hacks or efficiency in trading, right? And IBM is sort of in the center of all of this. IBM serves many financial institution customers mainframes, right? And a large portion of backend systems of financial institutions are mainframes in modern day. So sort of emulating those kinds of go-to-market strategies, I really do believe will be what will keep your boat steady in the short term. And then in the long term, I hate to say it, but it's the same. Making sure you can continue to be able to say you are driving clear value prop, even when the market gets better, right? As things like AI and blockchain evolve and merge together for things like, provenance of AI models, trustable or governizable AI models, or regulatory policy opens up in various geographies, value props that are good defeat all the noise, right? We're in a market where the fundamentals are all that matter. And even when, the fundamentals don't matter, you'll be in an even better position with the fundamentals if you have them down. So really just drive deep value for your financial institutions, ask them their pain points. I think that's a success mantra for digital assets penetrating in the economy, since from my perspective, the financial institutions will be bringing in the large majority of the capital into the space. But I think more on a technical level, right? Just making sure you're secure with all these things. There's various standards for custody today. There's various standards for interoperability or movement today that are being merged with digital assets, and making sure you can express that as well, I think will play very heavily into the success for the future.
Yeah, I think you mostly worked on the quantum computing part of the technology. What's your take on how this quantum technology is going to impact, especially on the digital asset side? Is it from the security? I think you raised a valid point about the security. What's your take on that from the security perspective?
Yeah, great question. So, some of the basics in this space are, once quantum computers are big enough, then you can store the keys of, Bitcoin wallet users or whatever it is and hack them later. Which is why we've been doing a lot of work around post-quantum cryptography, right? Embedding the post-quantum algorithms that are being NIST approved into your, I'll call them systems or software even, help guide not only financial institutions, but their regulators, right? Their governments into a position of just more clarity and calmness, right? It's a sales prop, it's a value prop. So, embedding that into your whole stack from hardware to distributed systems, obviously with no validators, or ZK proofs, right? Emerging ZK proofs, post quantum. Really drive security for the future at scale of $1 trillion of transactions a day. So yeah,
absolutely. Yeah. Perfect. Hey, Parth, I believe that you have to drop for another meeting. So thanks, Parth. Thanks for joining, and I'll see you
so
soon.
Much. Yeah, let's stay connected offline also. And this was a great session. I really want to learn more about what the panelists' views are on different aspects of the ecosystem. Thank you so much for having me.
Thanks, Parth. Okay, so we will move on and continue our session. Looks like Ravi has some issues with the connectivity. Okay, so next one I have for Ed. For the key use cases in finance like settlements, tokenization, remittances. Since your main role is from the development relations perspective, do you see are there any reference models that are being evolved over this period of time that organizations could refer to, not only from the technology perspective, from also the commercial and the business perspective? What are those best practices that organizations can inherit for future implementations?
That's a great question. And I'll set a little bit of context around that. But what we have seen as a requirement for the adoption of distributed ledgers across most industries, including in finance, is having an open mind to the fact that this is precisely an evolution, right? We have these existing systems that are somewhat obscure, inefficient, and expensive and fragmented because they require an element of human trust, right? That's why all those drawbacks exist. And so everyone has their own separate system, their own separate book, and then we have to do the manual reconciliation and settlement. And that's what basically ensures the trust. But with this, evolution that incorporates digital assets and distributed ledgers, that trust element is outsourced to the math and to distributed systems so that we can have a single source of truth. And that's how we're able to eliminate all those steps that introduce inefficiencies. And so, what we see for also the mass adoption of these digital assets in general is that we need to integrate with what's already built, right? Existing systems are clearly the starting point, and nobody's going to throw away what already works and what has been built over decades. The way I like to say it is that businesses know that they're not going to throw away the baby with the bathwater. But they are willing to incorporate these Web3 components into those existing systems, like financial infrastructure. And so, more specific to your question, that's where we're seeing these players in the traditional financial industry exploring and collaborating with these players in the blockchain space, right? One example of that is Swift collaborating with Chainlink to enable the development of tokenized assets. And again, that's one example of how we're integrating these new technologies and solutions from Chainlink with that existing financial infrastructure from Swift. And you also have other examples like Visa, MasterCard, big banks, and big payment processors exploring and collaborating with other players in the blockchain space. And then the other part of that evolution that we're seeing is more around the standards, the frameworks, and the templates that we're seeing more of to enable businesses to incorporate blockchain in a way that helps them meet their operational and their regulatory requirements, right? And I have a couple examples there. One is the Enterprise Ethereum Alliance has this reference architecture that precisely helps enterprises adopt Ethereum, in this existing business world, right? With a big focus on data privacy, which is something that big companies care about. And the other example is on networks like Hedera, right? You have these open source frameworks that enable enterprises and small to medium businesses to tokenize carbon assets or to create their stable coins with a relatively low lift, right? And keeping compliance, regulation, and also operational requirements in mind. And so just to summarize my framework there, it's like you have the existing systems as the starting point that will evolve. Then you have these integrations with those existing systems and infrastructure with the new technologies and solutions. And then from there, that's where we see the standards, templates, and frameworks kind of emerge to enable enterprises to adopt the technology and use it at the global scale.
You know,
Yeah, that's perfect. Go ahead.
I really like this point. You know, I already mentioned earlier, IBM built mainframes, and you know, a large portion of the financial institutions run on mainframes. So, you know, I really agree with your points, and I want to kind of hone down on what that really means, right? What does it mean to move from a mainframe to a cloud, right? What is the reference architecture to move mainframes in the cloud, right? Do you keep your mainframe, right? Do you do things on-prem? Is there all sorts of regulatory and like data privacy concerns with that? We see that in the stories of CBDCs, right? Like,
Exactly.
you know, institutions want to keep their data and their payment systems inside of their nation. And to do that, they need data centers in their nation. So, you know, a little bit of shout out on our side, right? We're the only cloud with mainframes in the cloud. So, you know, we've been doing some work around that to build those reference architectures, deployable architectures on IBM Cloud, and obviously to ensure that your security and standards and risks and controls for your payment processing systems are secured and resilient as they were both on-prem or in public cloud, which, right, more or less the point of that is the story of hybrid cloud is the story of digital assets too.
Absolutely, absolutely. The next one I have for Ravi. Ravi, since you have been kind of dealing with various different enterprises, why would organizations think about strategizing their digital asset journey for long run? What's your thoughts on that?
Sure. I'm so sorry, first of all. I think there had been some choppy internet at my end. Apologies for that.
No problem.
I think, you know, when it comes to strategizing the Web3, there are some inherent benefits that Web3 brings into the table. That's where I feel that many large institutions and enterprises have been very actively looking at what Web3 can be helping them for innovation. And I'm 100% sure that there is either a small experimentation room or otherwise there is a good robust team for every institutions in order to explore their Web3 strategy. I believe some of the inherent benefits that Web3 brings to the table in terms of cost optimization, in terms of bringing the trust into the ecosystem, or otherwise the decentralization, which is not necessarily a distributed thing, but also bringing in censorship resistance as well as auto execution of certain terms and conditions, which actually makes it a very vital tool when we are, you know, talking about a global ecosystem, global partnerships, and execution across the globe. I think with those things in mind, also there had been a lot of development that has happened in the tech maturity. So earlier, the use cases which couldn't be supported because of the scalability issue has now been supported with the enhancement that has happened in the technology like zero knowledge, which can provide, you know, a lot of
I think Ravi's. Ravi,
and I think last but not the least,
yeah, your connection is kind of intermittently working. Your voice is breaking. Maybe you can keep your video off.
Yeah, let's try that. So I was saying that, across different inherent benefits of blockchain, there are few enhancements that happen in the technology. For example, with the help of zero knowledge technology, there are now very, very efficient scaling solutions out there. And, a shameless plug there in terms of the ZK technology that Polygon is also building up, where we can actually enable a lot of use cases previously which were not enabled for the implementation by larger institutions. Also, the infra and tooling has been simplified to a larger degree, where a wallet creation in the background, or maybe the bridges, the on-ramp, off-ramp, oracles, I think all those tooling and infrastructure are now becoming more seamless, which enables the enterprises to create those feasible and viable use cases. I think programmability of assets is something which is my personal favorite, that fits
Absolutely.
into the strategy of many larger enterprises, whether they are talking about some investment banking, they are talking about private equity, or they are talking about stock, bonds, or whatever segment it is. I think programmability of the assets certainly opens up a lot of innovation opportunities.
Yeah, that's a great point, Ravi. Uh, I think so far we covered about the various aspects of digital assets implementation. We touched upon the learnings. We touched upon what are the limitations, what are the challenges. We also looked at apart from the barriers, but what is the success mantra for this one, and how we can make this more adaptable from the reference architectures. Because what I think is, most of these players, be it the SMBs or the enterprise level organization, we are all kind of in a stage wherein we are trying to, jump into that experiments, try to learn from those experiments that we are trying to build from the POC perspective, but also trying to take those learnings to take this journey further ahead, right? And one trend that I'm currently seeing is also the partnerships. Recently, as Ed was rightly mentioning, that Swift and Chainlink, they partnered together to implement the cross-border remittances. Recently, I've heard the news that MasterCard has partnered with Moonpig. And similarly, we will see such partnership evolve over the period of time, because organizations working in that one single area, rather than that, they can kind of come out of it and have either, like Talha was mentioning, creating the consortiums, creating those partnerships together to beat those challenges, to come up with the ease of experience for those integrations together. So those are a few thoughts that I actually kind of took away from these discussions. So I think it's now 4:13. We can conclude the session with some of the closing thoughts of our panels here. I would start with Aid to have those closing thoughts on the panel.
Sounds good, Sai. I would close with the fact or the thought that the opportunity is massive, right? When we think about digital assets, when we think about trends like tokenization, I think those are trends that are going to have a huge impact in the future of many industries, obviously in the financial sector. And so the businesses that are forward thinking, the ones that have the ability to start building strong solutions today, will be the ones in a very good position, in the next 2, 5, 10 years from now. So for those, founders, builders in the audience, I can only give words of encouragement, right? To continue developing, exploring, and adding value with these new technologies. And as we saw, there are challenges, that every new technology doesn't come for free. There are always challenges that we mentioned, like regulatory, behavioral, and technological. But as we said, every substantial new technology has had those in the past, right? The internet, we saw that with credit cards taking the longest time to be regulated. But at the same time, having this cautious optimism and the long-term vision and thinking are likely to pay off dividends in the future. So that's what I would close with. And if there are any questions regarding the space, regarding Hedera, the technology, or the ecosystem, happy to get in touch later on.
Perfect. Thanks for that, Ed. I'll move to Talha. What's your closing thoughts?
Yeah, I think the space has gone through its ups and downs, and I think the biggest kind of closing thought that I have is once again, stay the course. The fundamentals are all that matter. Drive true value prop, talk to your clients, understand their pain points in the end, and if there aren't any, then move fast. And even beyond that, you know, as the market grows to, you know, cover the future of all of money and beyond that value, right? The use cases and the merging of the different technologies in the market will present themselves for new opportunities. Partnerships will be the key for making sure that everyone stays afloat, right? I think in the past, the digital asset space was very, very tight-knit in terms of partnerships together for Web3 native stuff. Partnering together with financial institutions, partnering with technology providers, whether it's IBM Cloud or IBM broadly or any others like Adara, our analysts here, will be the key forward to staying afloat in the times to come and the good times to come.
Absolutely. Perfect. Ravi, can you hear me? Looks like Ravi's connection is again went off. I think with this one, we can conclude our session. Okay, we have got few questions here. So the question that I've got here is, what are the biggest challenges and opportunities for Web3 in next 12 to 18 months? Wow, good question. Talha, you want to take this?
I think it depends on who you focus on, whether if it depends on the opportunities for things like financial institutions or for startups. I think since the audience here is smaller, more startups, so I'll try to focus on that, but I'll kind of hit both. 12 months, there's a lot of opportunity in things like account abstraction that I've been seeing in the market on the more Web3 native side. Tokenization is probably the hottest topic right now in terms of opportunities. I would say for both the next 12 and 18 months. And challenges inside of both of those to me. For tokenization, it's, to be frank, security. Security and value prop. In terms of which parts of the tokenization world you start with. So right, the banks have started with intraday because it probably clears up liquidity for earning yield for a couple more days, which is revenue, right? Ironing out those pain points across the stack, I think, will be really critical. And one of the biggest areas that we've been looking at is custody, right? You can't tokenize assets unless you can hold them as a financial institution. So making sure that those, the security of all these things are merged together with traditional systems, because traditional systems work, I think will be a big opportunity to solve the challenges of tokenization. Both in 12 months and 18 months time.
Perfect, perfect.
I think
Ravi, you want to add something to this question?
Yeah, exactly. I think I would like to say that, you know, this is also getting very interesting in terms of app chain development. So many projects who have, you know, either a high volume or they got a high user base, and they really don't want it to use any particular infrastructure, especially the public infrastructure. I think opportunity to spin up very quickly their own chain or something like an app chain. I think that's a very interesting development. And, you know, we feel that financial institutions, larger enterprises, governments, I think they are the ones who would be spinning up something like a sovereign chain. And there would be an opportunity where they can quickly connect this up to the public chain in case needed. And that bridge can help in terms of, opening up the liquidity across different chain, or otherwise there can be an interoperability layer which can help in terms of letting these chains to talk to each other for unified liquidity and sharing the assets. So I think that's a very interesting development that we are seeing.
I wanted to jump in very quickly, Sai.
Yeah,
I think Ravi touched on the point that I had in mind, that over the next 18 months, that interoperability between all these different networks is a challenge that applies for both small businesses and enterprises, right? What we've seen so far is that these ecosystems are very fragmented. And so how can these businesses access the value and the capital that is in all these different ecosystems? That's where that interoperability, where that ability to speak to each other and transact with each other comes into play. And I think Ravi articulated it in a very good way.
Okay. I have got one more question. When is the next bull run? I'm just kidding. Okay. So Ravi, we were just kind of taking the final thoughts, the concluding thoughts from every panelist before you kind of had those issues. So before we drop, would you like to have your final closing thoughts?
Certainly. Yeah. I think apologies once again. This
No
is
problem.
a bad afternoon in terms of the choppy internet out at my end. So sorry about it. I think in terms of closing thoughts, what I would say is that there should not be any rush in terms of force fitting Web3 components into a use case. There are very, very amenable candidates out there where blockchain or the Web3 components make real sense. But I think there should not be a force fitting of those components. And I think keeping the regulators aligned in terms of where the innovation going is going to be accelerating the adoption. And that is what we believe is that, especially financial segment, which is highly regulated industry, I think the regulators are also very keen in terms of learning this technology. It's always going to be a catch-up game for the regulators in terms of the innovation, where it's going. But now they are opening up, they are willing to sit on the same table, understand the technologies. So I think it's going to be very interesting in terms of, first of all, bringing all these stakeholders together, ensuring that all interests are aligned and not force fitting the technology, but bringing in those viable use cases, the innovation that can be leveraged with the help of Web3.
Absolutely. That's a very great thought. And I think with this one, I have got one more question, and this is for Ravi and Ed. Have you seen a slowdown in the digital assets and overall Web3 startup investments? Have Polygon and Hedera also limited their grants and supports for the startups? I'll start with Ed.
I would say that the interest and the curiosity and the investment on digital assets is still there. Regarding the second part of the question, regarding limited grants and support for startups, I think what we're all seeing is a bear market. I cannot speak directly for the entity that is doing the ecosystem development in the Hedera ecosystem, but I would understand their position if perhaps that's what has taken place. But what I'll say is that during this bear market, that's where the startups that are in a strong position or well-funded, and also the small, medium, and large businesses have spent the time, building the solutions and developing. Now that the noise is very low, and it's time to put a lot of focus on the signal.
What do you think, Ravi?
Yeah, I think the grant part, I believe many of the projects are only correlating that grant part to a dollar amount, which to us from Polygon perspective, there is much more larger value that we are sharing with a lot of projects, right? So it may not be just a direct dollar amount, but there are many initiatives like Polygon Village, where we are helping with different types of vouchers, mentoring sessions. There are requests for startup. There are different programs where they can certainly extract much more value from the ecosystem. The composability of the network can help project to their application. Those are the larger values that we wanted to pass off, looking out for that direct dollar amount. And I think this is where many of our larger ecosystem projects are also helping with some kind of bounties, some kind of grants, so as to help them build into the Polygon ecosystem. But I think there is absolutely no slowdown. Rather, I would say that bear is for builders, right? So the builders should take advantage of this time when there is less noise, when they really don't have to put a lot of efforts only on marketing, but they can spend more time in terms of building. So I would rather say that this is a great time for builders.
Yeah, so I would recommend those who are interested, please reach out to Ravi and Ed for your request for grants. One more thought on this one, on this question. I've recently seen basically whether it is a slowdown on the overall Web3 startup investments or not. I've recently seen A16Z, which is a major venture firm. They started a crypto startup school in London. I think that was like last month, and that too in this bear market. And this is like a super interested news for me, that a big investment firm who is kind of investing into creating a platform for the startup, who can come there, learn from that startup school, and get into building various projects in the Web3. I think that itself shows that how bullish they are, and this has that sustainable future in the long run. I think yes, Ravi, you have to say something.
I think just on a lighter side, I would add something to your point. In fact, I've seen that when I was flying United Airlines, A16Z got a module placed into the airline's video program where they're talking about crypto and digital assets. That's
Wow,
how aggressively they are going. So it's very interesting to see how they are trying to bring more adoption. But at the same time, I think education and awareness is going to be key, because we are still very tiny in terms of overall Web industry.
Absolutely. Yeah, we are going to make it, man. Perfect. I think we have almost reached to end of today's session. It was super interesting discussion today, and all the brilliant panels that I have with me today. There was a lot to learn today. Very great thoughts that we exchanged, and I hope all the participants, my audience, they have good takeaway from this session, and we'll look forward to connect with you in the subsequent session with the FIS Innovate 48 part edition. Thank you, everyone. Thanks for joining. Have a good one. Take care.
Thanks, everyone.
Thanks, everyone.
Thank you.